I'd like to welcome everybody. My name is David Collins. I'd like to welcome everybody to my YouTube this morning. It's on investment strategies and to let you know that I've been practicing commercial investment real estate since 1980. And I guess I've seen every kind of market that we've had to offer. When I first got into business, interest rates started out in 1978, actually, right around 10%. By 1980, they were hitting right at 18%. And ever since then, they've gone up and down. And watch the market as it maneuvers through the different cycles that we have. I've also watched and understand what makes investment properties more valuable at certain times in these cycles. I've got a class that's going to be coming up on Wednesday. And you can go to my website, davidcollinsseminars.com, and you can see our schedule. But it's going to be on investment strategies in real estate, and it'll be a 2-hour session. And what I'm going to do is I'm going to go through the entire process of finding the right kind of property, and then how to go about evaluating that property so that it makes economic sense. Just buying a property for the sake of buying a property is what this is about. It's about making it make economic sense for the future. And I think what I'm going to talk about right now, just kind of as an introduction, the general rule of thumb for most places or for most investors is if 100 times the monthly gross rent is about what you should be paying for an investment property. And it's just a good rule of thumb. It seems to work for most people. And in my class, I'll explain to you exactly why that's so. One thing that we cannot afford to do is over-invest in a property because it's not going to make sense. We also have to make sure that we invest in a property that's going to appreciate. And the only way to do that is that rents have to continuously go up each year. But I think right now might be a good time to talk about some of the important issues that's taking place that's going to impact investment real estate as a whole. I can remember buying investment real estate and actually selling investment real estate back in the late 1970s and early 1980s. And one of the things that was profound when it took effect was the tax cuts in 1981-82. And it was a tremendous series of tax cuts that impacted everybody. The average income tax by the average taxpayer in the United States was about 50%. Upper income was paying about 75% plus. And by the way, that's when we saw a lot of corporations moving out of this country and moving into China, into a lot of other places, because we were an environment that was business unfriendly, if you will. But when the tax cuts came in 1981-82, all of a sudden we saw businesses coming back to the United States, but we saw more cash in the market to be able to invest. And we saw an acceleration in the investment world, in the real estate world. We saw the economy soar. I think it's important to understand that 75% wealth of this country is in real estate, and as the rest of the economy. And in recent history, we've seen the real estate market, we've seen it fluctuate with its cyclical patterns. And it inevitably, and I'm going to go back to the theme on taxes and things of that nature, that anytime that taxes are increased, we always see a slowdown in that investment. And let me make sure that we understand something. When taxes go up, that investor has a couple of choices. They can either get out of the market, which some people do, or they can raise their rents to compensate for the additional taxes, and typically that's what they do. So I think that it's for people to think that raising taxes on the rich or anybody else is the solution for everything. I think that you're going to be wrong about that. That somebody's going to have to pay for it somewhere along the line. And right now, where we're standing today is the 2nd of November. We've got an election tomorrow. And let me just say this, that the tax cuts we got in 2017 moved a very slow economy. It was getting a little bit better, but only about 1% to 2% annually at the very most. And then it kicked into high gear when we got our tax cuts in 2017. The real estate market has surged since that point, and the economy has surged since that point. I watch these things and I kind of understand, and you can sit and watch the trends. If we stay on this pattern for the near future, you're going to see real estate continue. But if we see a trend where all of a sudden those tax cuts are eliminated, regardless of what part of the economy it's coming from, it doesn't really matter. You're going to see a slowdown. So I think that we need to be prepared for both, and to say how do we either move forward with what we've got at a very good rate, or if business is thwarted because of tax consequences come later. Now, what do we do and how do we maneuver through that? So what I want to do tomorrow is, or on Wednesday, I'm going to go through a lot of things, a lot of cash flow analysis, through the various processes of evaluating pro forma, and look at the future and say, where do we think this thing's going to be in the next 2 years, 3 years, 5 years, and kind of plan a strategy of wealth building. Once again, real estate represents 75% of the wealth of this country. And as long as we can understand that concept, as goes real estate, goes the rest of the economy. And I think that we have some great opportunities for the future if we can just stay on the path that we're on right now. One of the biggest problems we've got is that we have a shortage of inventory, but interest rates have never been lower. It's just a great time to get involved in not only owning a home to live in, but also buying that investment property that could be the security for you for the future, and for maybe your family in the future. So with that said, if you want to go online, or if you want to email me, david@collinsseminars.com, or you can go to davidcollinsschools.com to see my schedule. It's coming up. Just Google me. That's all you have to do. You can find me. And I would look forward to having you in class, and also enjoying investment strategies, especially in residential real estate, because I really believe that that's the future. And I'd like to, at this point, go ahead and sign off. And I hope that I'm going to see you on Wednesday. It starts at 9 o'clock Central Time Zone, and it'll be for 2 hours. So I look forward to having you there.